My dear children, in this module, we are going to study the term provision. The term provision means any amount written off or retained by way of providing depreciation or retained by way of providing for any non-liability. Provision is a charge against profit to meet the certain non-liabilities or contingencies. It is a specific reserve. It must be maintained whether there is a profit or loss. The objective of creating provision is to cover the loss for which it was created. The different types of provisions are provision for doubtful debts, provision for taxation, provision for bad debts, etc. The important features of provision are: first one, it is maintained to meet the non-losses, for example, depreciation, heavy repairs, renewals, etc. Another point is to meet the expected contingency, that is, doubtful debts, discount on debtors, liability for disputed claim, any contingent liability under Workmen Compensation Act, etc. It is very useful to meet an outstanding liability such as outstanding salaries, wages, rent, income tax, etc. Provision or specific reserve is not surplus. It is not represented by any asset. Provision is not available for the distribution among the shareholders. If the provision exceeds the required amount, the excess is treated as reserve. The first important type of provision is provision for doubtful debts. It is created to meet any future loss if the debtors fail to pay the whole or part of the debt owing by them. The amount set aside for this provision is charged out of the current year's profits and loss account. The logic behind this, it is the debtors also belongs to current year, and we are conservative in this manner. Provision for doubtful debts is posted at the debit side of the profit and loss account. Debtors may be of three types. The first one, good debts. Those debts from whom collection of money is certain. Another type is bad debts. Those debtors from whom collection of money is not possible and the amount of credit given is a certain loss. And the last is doubtful debts. Those debts who may pay, but the business firm is not sure about the collection of full amount from them. The important journal entry for charging provision for depreciation account equal to profit and loss account debtor to provision for doubtful debts. Another type is provision for discount on debtors. It is the trade practice that when the debtors make the immediate payment or the payment as early date, we allow them discount at a certain rate. As it is the trade practice, it seems to be judicious that we should make the provision for discount on debtors. As the provision for discount on debtors relates to current year's debtors, so it should be charged out of the current year's profit and loss account. The provision for discount on debtors will be deducted from sundry debtors at the asset side of the balance sheet. Next is provision for taxation. The taxes have to be paid to the government on the profit of the current year in the following assessment year. It seems necessary that certain specific amount for this non-liability must be set aside out of the profits and the loss account of the current year to make the payment of taxes. The amount set aside for this purpose will be debited to profit and loss account. It will also be shown at the liability side of the current year because the amount is still payable. During the next year, the taxes of the current year will be paid. For making the payment of taxes, we shall debit the provision for taxation account and credit the bank account. The balance of provision for taxation account will be shown at the liability side so far its balance exists. Provision for taxation may be treated as both the current or non-current liability. If it is assumed to be non-current liability, previous year's provision for taxation will be paid during the current year's provision. Then the tax payable on the profits of the current year will be charged out of the profits and loss account of the current year. Some examples of provisions are provision for bad and doubtful debts, provision for discount on debtors, provision for taxation, provision for depreciation, provision for repairs and renewals, etc.